Let's talk about your listings, the spike in mortgage rate, and the effect it has on home buyers and home sellers, and how can we address this issue. So about a month ago, maybe a little bit more, we were down below 6%. And now today, 30-year fixed conventional, national average is up over 6.5%. So this is a problem. This is a problem for home buyers. This is a problem for home sellers. A lot of home buyers are moving out of the market or holding off to see what rates do because they're either priced out of the market now because a month ago they were qualified at 6% or somewhere in that price range or that rate range. And now with the higher interest rate, the payment's higher. Some are just not willing to increase their budget. Some just can't do it because that's where they're capped off. So it's causing problems with houses moving and with buyers in the market. So how do we solve this problem? Well, it's pretty easy. The first thing I want to talk about is how a lot of listing agents will go to their sellers and say, hey, we have to reduce the price to get more action on it. Well, typically that doesn't work well unless you're overpriced to begin with. The second thing they do is say, well, can you give us some seller concessions and we'll use that to buy down the rate, which is a great idea. But here's the problem with that. There's a disconnect. There's a disconnect between that and the buyers because buyers don't understand what that means for a rate. You know, if we're at 6.5% today and the sellers are willing to pay $5,000, $10,000, whatever it is, how do you tell the buyers what that rate translates to? Because you don't know. Mortgage rates change all the time. They change throughout the day, sometimes once, twice, 3 times or more per day. Sometimes they don't change at all. They're very volatile. So you really can't market what that rate is, right? Well, that's wrong. Here's where I come in. So I have a program where the home seller could buy down the rate for the buyers, right? Pretty simple, just like the last one. But here's the kicker with this. This is where it becomes a lot more effective. We lock in a rate, a lower rate, what they're willing to pay. We lock in a rate for you. You can go ahead and market that house with that rate. So let's say, for example, and this is purely just an example. This is not based on any rates or anything. I'm just giving it to you for this scenario for an example. Let's say rates today for 30-year mortgage, conventional fixed, was at 6.5%. If they're able to go ahead and buy down that rate to 5.5%, it's a huge difference. It's way better than lowering the price of the house. And I'm going to read an example for you in just a second. Because a lot of times people think, let's lower the price. Unless you're out of the market with your pricing, it's a bad idea because you can actually give the sellers and the buyers a better opportunity. And here's how it works. And let me look at my notes here. So let's say the house is listed at $500,000. In the mortgage rate today, we're going to say is at 6.5% for conventional fixed. And we're going to use $500,000 as the loan amount. So we're going to use it just strictly $500,000. At 6.5%, the monthly principal and interest payment is $31.60 per month, roughly. Next thing is, let's just say you reduce the price $10,000. At 6.5%, the rate is the payment is going to be $3,097 roughly, a savings of a whopping $63. Makes no sense. So here's what the solution is. That rate buy down is good for 60 days, so you can market it on your social media. You can market it on MLS. You're given an actual rate that means something to buyers that are in a market where they're being told, hey, the rate is 6.5%. So if they go ahead and lock in a rate, it's good for 60 days. Once it goes under contract within those 60 days and they use me as the lender, they're able to get that rate. We have 30 days from that date to close the loan. Real simple. So here's the huge savings. If we kept it at the original $500,000 because it was priced right, offered the 5.5% interest rate, the payment drops down to a principal and interest payment of $28.39. That's a savings of $321. $321 per month. Huge, huge difference. The difference between reducing it from $490 down to $490 at 6.5% is a difference of $258. It's a huge, huge difference. If you're not doing this, then you're leaving money on the table with your sale. You're reducing the price. You're not getting as many looks at it. This is going to help you drive business to your listing and help get the sale done. So if you're interested in figuring out how this can work on your listings, give me a call at 904-712-1500. 904-712-1500. Let's talk about what the situation is with you. Let's see what the numbers look like. Let's see if we can help you get more eyes on the house and help you sell that listing. And for you buyers, this will help you get into a house for a lot less money per month. So if you're shopping around and you're looking to figure out how you can get a deal done, give me a call, 904-712-1500.